Australia's Consumer Price Index for the June quarter is set to be released on Wednesday, with some forecasts predicting growth may have already reached nearly 7%. Joining us live now, Peter Switzer, founder of the Switzer Report. Pete, good morning. So what if it's a bad number, which people are expecting?
Well, 6.3% seems to be the consensus number, Pete. Anything above it will worry anyone with a home loan. Anything below it would be a really good win for the Reserve Bank and also for anyone with a home loan.
So how would that? Is it going to be below 6.3% in your view? I would doubt that.
Yeah, me too. Pete, remember the June quarter had all those petrol price rises, and we saw in the US they take monthly CPI readings, and that was a 9.1% for June. Now, July is expected to be a lower number because petrol prices and oil prices have started to fall. So, as I say, I'm benchmarking 6.3. If we come in on the consensus number, that would be a pretty good result, because anything after that is going to be affected by lower petrol prices. So that could be a positive, but we've also got wage rises coming down the pike over the next 2 to 3 months, I suspect.
We're still looking at so many rate rises before the end of the year. Is there a number that you would have in mind, Pete, that would suggest to you that maybe the RBA would go to 75 basis points as a rise to try and move faster?
Look, Pete, I think if the number came in over 7%, which would be a shock, they might go for the nuke option and really try and scare the pants off us. But remember, raising interest rates is all about trying to slow down our spending. So there's a scare factor in it. But if it got over 7% now, because the RBA thinks later this year the peak will be 7% or so. But if it came in early, that's when they would nuke us. If it comes in earlier, it would be a continuance of Australia's fantastic run when it comes to economic data.
Okay, the US Central Bank is meeting. Will they raise by 75?
Yeah, I think so, without a doubt. The 9.1% for them was a big number. Even though July will come down, I think the Fed would probably like to do one more 0.75% rise, because the market's kind of expecting it. But then, if the July number comes in better than expected, they might surprise and maybe hold back. At the moment, September is seen as a 0.5% increase, but there is a fair degree of recession fear in the US. It's a real battle between economists about whether there will or won't be and how severe a recession might be. At the moment, mild recession is dominating, but I think the Fed would love to think that inflation is coming down and they could ease up on these interest rate rises, and the stock market would love it if the Fed eased up.
Okay, staying in the US, some of the biggest names in world business will report this week. Should be huge for Wall Street and world stock markets, including ours.
Yeah, without a doubt, Pete. Apple, Alphabet, which of course is the parent of Google, Meta Platforms, the parent of Facebook, McDonald's, 120 S&P 500 companies will report. It's the biggest week for US company reporting. So far, it's been better than expected. 70% of the 21% of companies that have reported so far have beaten expectations. Now, but there's been a few shockers, like Snap, when it came out with a bad report, really spooked the market. And so looking at these big companies, if they turn around and say things are looking grim, that's going to be bad for stocks. If they surprise on the upside, we might see another leg up for stocks, which has been pretty good. Since June 16, June 17, the NASDAQ was up about 13%, which kind of gives you a feeling that the worst might be behind us. But this week's reporting will be critically important.
Okay, Peter Switzer, thank you.